Cathy Konicki, in your latest survey, you found that a lot of endowments and foundations are having some concerns about their hedge fund investments. What's wrong? Is it the fees? Is it the performance that has them concerned?
I think the major concern of endowments and foundation has been the performance over the past couple of years. I think 2016 and 2015 have been difficult years for performance, and so they're questioning the validity and the role of hedge funds in their program. I think that's number one. But they're also concerned with fees, and then they also are seeing a lot of institutional public pension plans getting out of the hedge funds.
So are they going to pull all their money out, and if so, where are they going to put it?
About 55% of the respondents in the survey said that they were going to do nothing with their hedge fund allocation. There are some that are less than 20% that are looking to make a change. I think it's very interesting that the biggest response of where the hedge fund money is going to go is in equities, public equities. I think that may be a holding place before they can reallocate it into the private equity.
And not all strategies are doing badly. Some of them are doing fairly well. Which strategies are the best performers so far?
I think in the recent periods, it's been the multi-strategy hedge funds as well as global macro. Global macro does better in volatile markets, and it's more the event-driven managers, and some of the long-short equity managers have their performance has struggled.
All right, and what about the state of the economy? What are the endowments and the foundations that you're speaking to say about what's going on out there?
Okay. Their biggest concern is slowdown in global growth, and that's been a huge increase in their concern from our prior surveys. And I think a lot of that has to do with what we've seen in the volatility in the markets, the global growth slowdown, the concern with rising interest rates in the U.S., potential global deflation abroad. All of these compound how these endowments and foundations are going to meet their return expectations going forward in a low return environment.
And then finally, are they concerned at all about the U.S. presidential race? Because a lot of fund managers are saying that it's adding to the volatility or potential volatility in the market.
I think it's adding to a lot of concern. Our survey showed that Hillary Clinton had an overwhelmingly popular vote versus Donald Trump, but I think they were both pretty neutral, our survey respondents, in terms of who's going to add the most value and help the economy.
All right, well, thanks a lot for coming on and talking about it, Cathy.
Thank you, Greg.
And thank you for watching The Street.